Subscribe to my channel Report Stock.
Welcome to the Deep Dive. Today, we're going to unpack Kroger's Q2 2025 earnings. We'll look at their strategy, how tech fits in, all that good stuff.
Yeah, and the mission really is to get past the numbers and see what's actually happening. What does it mean for groceries?
Exactly.
Yeah.
It's this weird mix, isn't it? Like strong growth, but also some pretty big structural moves happening at the same time.
It really is. It's a balancing act. The results show how they're handling that growth while making some tough calls for the future.
Right. So let's start with the wins.
Yeah.
I mean, despite those tough calls, they had some solid numbers. Identical sales up 3.4%, excluding fuel.
And that's the 6th quarter in a row they've seen improvement there. Pharmacy, e-com, fresh food, those are really pulling the weight.
So that consistency, what's it tell you about how they're connecting with shoppers?
Oh, it says a lot, especially on the digital side. E-commerce sales shot up, 16%?
16%, yeah.
And that was mostly delivery. And actually, for the first time, delivery sales were higher than store pickup. That's a pretty big deal.
That is a major milestone. So, okay, sales are up. How's that looking on the financial health side? And, what are they telling investors?
Financially, things look pretty robust. Their adjusted earnings per share went up 12%. Solid. And they bumped their quarterly dividend by 9% too. That's basically management saying, we feel good about this, we expect it to last, it keeps investors happy.
Right, reassures the market.
Yeah.
And part of that customer connection you mentioned,
Yeah.
the price cuts.
Yeah, huge part. They lowered prices on over 3,500 products. And it seems to be working customers are noticing. Plus, their own brands, Simple Truth, Private Selection, they are just crushing the national brands right now. Shows good trust, good value perception.
Okay, so that's the growth side. But then, like we said, these other moves, closing about 60 stores they said weren't profitable and cutting nearly 1,000 corporate admin jobs, that feels counterintuitive maybe.
It does raise an eyebrow, yeah. But it points towards strategic efficiency. Even with overall growth, they're clearly looking at parts of the business that maybe aren't performing as well.
Trimming the fat, so to speak.
Exactly. And you've got other pressures too, right? Fuel sales and profits are down. The pricing environment is still super competitive, so they need these responsible investments just to hold their ground.
And the pharmacy sales, strong, yes, but lower margin, right? So that kind of puts a little squeeze on the overall profit picture.
That's right. It impacts their FIFO gross margin rate. It's all part of the complex equation they're managing. Adapt or,
Yeah. And speaking of adapting, the e-commerce side is getting another look.
Ongoing strategic review there. They're talking a lot about asset-light delivery possibilities. Think quicker deliveries without having to totally redo stores, maybe using third parties more.
Okay, so less capital intensive.
Precisely. We should hear more on that in Q3, they said. It shows they're trying to be nimble.
So dealing with the now, but also building for later. Which brings us to AI. Seems like that's a big piece of their future strategy.
Oh, definitely. They don't see it as some fancy add-on. For them, it's like a natural next step, given all the customer data they have.
And how are they actually using it? Is it practical stuff yet?
Very practical. They're using AI tools right now to get better at managing shrink.
Which is code for waste and theft, basically.
Right. So AI helps predict demand better, cuts down food waste. It can also flag weird transactions, maybe help deter theft. They're also using it to boost sales, improve operations, things like optimizing staff schedules, figuring out the best way to lay out shelves, planogramming.
Okay, so optimizing the shelf layout.
Yeah, and making personalization much sharper for customers. It's getting embedded pretty deeply.
So way more than a buzzword then. It's a real tool. And that plus other things like pushing their retail media business.
Right, giving advertisers unique ways to reach Kroger shoppers.
And just generally focusing on cutting costs. Sounds like that's the plan.
Yeah.
Use tech, get efficient, manage the competition, and fund growth.
That sums it up pretty well. It's
Right.
about modernizing how they operate, top to bottom, to stay competitive and profitable.
Okay, so wrapping up. Kroger's doing this interesting dance, keeping their traditional store strengths while really pushing hard on digital, on tech, like AI. It's growth, but also efficiency, a long-term play, which leaves us with maybe a final thought for you, the listener. As the lines between shopping in-store and online keep blurring, how could Kroger's playbook here, especially with AI driving efficiency and personalization, change what being a modern grocer even means? And, what could that ultimately mean for our own trips to the supermarket? Something to think about.
Subscribe to my channel Report Stock.